The Hedgeless Horseman here again, May 16th, 2023. Just felt like doing a follow-up to the last video to give some, let's say, real life example of why I just keep sticking to my guns, using my common sense, buying low, buying more if it goes lower, buying even more if it goes lower, knowing that no trend lasts forever. That means no uptrend lasts forever and no downtrend lasts forever. And any additional day in whatever trend direction gets it closer to the opposite trend. And obviously, if the lower it goes, the lower the starting point, the more you're expected to make. The higher it goes, the longer the uptrend continues, the more you're expected to lose, going from peak to next bottom. So I just had a, because I mean, what prompted this video was that I did some Twitter searches from periods when we ended up being at a major low. Of course, I didn't know that at the time. Nobody knew that at the time. But if you think I sound like a broken clock, and especially, or broken record is the perhaps the saying. Anyway, because I understand since, let's say, the peak in 2000, if people have just started following me then, for example, and it's like all you hear is, because that's pretty much all you hear. I'm 100% bullish at all times on juniors. I think are either cheap today or have a shot at becoming cheap in the future. Or what I mean by that is that they have some kind of value creation potential, which makes today's price perhaps look cheap, in a year or two from now. But if you just look at that, and especially if, when I say I'm buying all the time, I'm not buying any crappy junior every day. I'm not buying into trading sardines, etc. at highs. I now would be the time to basically buy trading sardines, because we're much closer to a low than a high. But I guess I want to make this point and just show that it's like, yeah, I've literally stuck to my guns since I started out. And what I'm saying that I can afford big drawdowns, paper losses, and real losses, because I am always fully invested from the absolute bottom tick of this sector since I started investing. And and no market timing at all. It's just I keep buying and buying and buying. The lower it goes, then it changes, and then it goes up. And of course, if you're in more alpha type place, it typically means, okay, when a bottom is in the sector, all plays go up. Certainly the trading sardines and beta plays, but your alpha plays will go up as well. Perhaps not as much as some really leveraged beta play. But when the sector turns down, if they have created value over that time, that is then it is expected that the next low, which I don't try to time, will at least be higher than the last low. Because like I showed in the last video where you had Great Bear suffered big corrections. But typically it was, at least over time, from higher and higher highs. So those are the stores I personally love, because that takes away all the market timing, really. The only important thing for Great Bear, the main reason why you could have made a lot of money in Great Bear if you held it long enough, is this simply because every additional year they created more value. They drilled up more ounces. They drilled up more value than it cost to drill. That's simple as that. That was the signal. That story kept on going up, and sometimes it might have been a bit overvalued given where given their progress, but then you had a correction, all of a sudden it was undervalued, etc. You could see the huge swings, but the trend for sure was up the longer more you zoomed out. But in the short term, you could have, in like Great Bear's case, there was a downtrend before the last rally and buyout. There was a downtrend that I think lasted around 460 trading days or something. So over a year of downtrending action, zigzag downtrending, the most frustrating. That's basically what frustrates most people, I think. The zigzagging. It's the false start. Oh, we're gonna get going. Nope, and then a new lower low, and then up again, but to a lower high, etc. Not many people could sit through that, obviously. But the ones who, let's say, understood and followed the story, and they're just seeing, prices has been declining for a year, but they've been adding value for a year. So it's like the price to value gap, that must be widening. So in that case, you would be more inclined to actually buy and increase your position the longer the downtrend lasted and the price to value gap the more the price to value gap widened, and all of a sudden at the end you would be a part for that last revaluation rally and buyout, and could have made a ton of money. But that's if you use, again, price as, let's say, noise or a tool, and the signal is actually the value creation curve, and the price to value gap. Anyway, here we have a tweet from March 14, 2020, and I did a tweet saying that, example when buying low and it still goes down 50% and can still be profitable, assuming one does not sell when it is still cheap and miss the sudden turn. My point, which I showed a bunch of times, even if you start buying here, because that's basically what my portfolio did. My portfolio went down 54%, and I just kept buying for months and months, because I knew that this is going to turn one day. So this wasn't a mistake. I could have done a mistake a bunch of times. If I bought here, sold here, that would have been a mistake. Well, first of all, maybe it was a mistake to own Bear Creek Mining in the first place, but using this as a proxy for juniors, meaning that everything else equal, or all else equal, this just got cheaper and cheaper and cheaper. So selling becomes dumber and dumber. Buying becomes better and better, because this is closer to the beginning of the uptrend than here, and this low here is closer to the uptrend than this low, etc. Every low takes it closer to the inevitable uptrend. So higher returns because it's from a lower level, and closer in time, so the rewards get here quicker. Obviously, if you bought here and here, same level, but the time from here to here is shorter than here to here. So from a compounding perspective, sure, the future returns were the same, but the returns came a lot quicker. So from a compounding perspective, that plays a part. And of course, one shouldn't really overdo it, because when you think about it, it's like, okay, yeah, a few months for, I don't know what, 400%. You could wait years for that to happen, and it will still be worth it. And I think thinking too much about when is also can go overboard, because then you start to market time. Because I see all the time people talk about opportunity cost, like, why be in this sector because you're not making any money? Yeah, okay, sure, you didn't make any money on paper over this period, then you made a truck ton of money from every single buy that you were for a period of time losing money on. And that's one of the main points I have. It's like, this is the easy way to do it, because you just know that the trend will change one day. You don't know when, you don't know from what level, you don't exactly know how high it will go, etc. But you know. So that's a That's not an if, that's a when. Those are the highest possible, conviction things. I mean, that's a certainty. Let's just put it like that. It's not often you can invest in certainty. We know that's going to turn around. We know the sector will not go down forever. So you know you're going to end up making money. And the lower it goes, the more money you're going to, the higher the future returns goes, etc. So I put up this chart on March 14, 2020 as a, rallying cry, or it's like, keep morale, copium, whatever you want to call it. And lo and behold, it's like, assuming one does not sell when it's still cheap and miss the sudden turn. And I, posted this today. And wouldn't you know, the turn was sudden after the last panic selling was done, and wouldn't you know, almost nobody bought. That tweet was made here, referencing, assuming one does not sell. You can afford this if you're not dumb enough to sell here. Obviously, as I talked about numerous times, it would be a lot better to buy than hold, and certainly a lot better than selling. And yeah, the turn was sudden. I mean, it was basically the day of the downturn, and then it went straight up 200%. And these are GDXJ. I think some juniors went up, 300-400%. I had absolutely no idea that was the bottom. But I knew this is ridiculous. These prices are absolutely cheap. This sector is not going to stay cheap forever. It did not stay this cheap at all. I mean, here we have just a V bottom. This was a more grinding bottom like we're seeing now. And okay, why the good and bads of that? I mean, here you didn't really. I mean, if you just held on for a week, I mean, all of a sudden everything felt better because prices were already rebounding heavily. And, within a month you were back to even from this level. But how much dry powder could you have gotten in? Unless you had a lot of... I never have a lot of dry powder, really. So, for me, the longer prices suck, or the longer this sector is cheap, from a period of time perspective, the more I can add, the more I can juice up my future returns by lowering my average, increasing my share count, ownership of all the metals, and of course, if it goes lower, I get more shares, meaning I buy more metals for every dollar invested, etc., and those shares have a higher revaluation potential. Here I didn't really have a chance. I mean, this was like these absolute bargain prices were gone within a day or two, or maybe three. From a psychological perspective, yes, it feels better when you kinda when you're not sitting in a paper loss for that long. You just looked stupid for about a month, and then you were, from this point at least. And all of a sudden, here already, every single buy since here was in the green. So all of a sudden, you feel really smart, perhaps. And when we're up here, it's like everything. You look smart on every single buy since, back here, basically, multi-year highs, especially in GDXJ. Not sure. I don't think that goes for the actual juniors, because the juniors, I don't even know if they went over their 2016 highs, but still the point is that yes, from a psychological perspective, shorter pain period, but this is more profitable because you can, especially if you are again full invested, but it wouldn't really matter that much. I mean, if you have a lot of dry powder here, you could have invested it at any point really, and you would have the full benefit. Here you just had a short time window, so it's much harder to take advantage of this opportunity. But of course, this was basically panic selling. So most people, or a lot of people, get margin called, selling out in panic. I think from what I've heard, there's some trading services that recommended selling down here, etc. That looked very stupid really fast, and I of course didn't know that, but I just knew from my experience back here that sudden turn. it can happen. I had no idea that this was the bottom, unless long afterwards. Nobody knew this was the bottom until, who knows, maybe here it's like, yeah, okay, that was the bottom. Because like I said a bunch of times before, we don't know when the rally is real or it's a false start. I mean, this high is higher than this, and then it peeled over. So the best offense and defense is simply to buy as low as possible. You maximize your future returns, and lower the risk, because from here to, I mean, could they get cheaper? Yeah, but from here they can get a lot cheaper. So you minimize the paper losses. That's mostly a psychological thing, of course. The main thing is that you increase your paper and real gains by buying cheap. So that's one example. That's from 2020 flash crash. Here we have one. I constantly catch falling knives, which I've seen today, people recommending people against catching falling knives, and everybody has some trader or whatever that says don't catch falling knives. And then we of course have more akin to Buffett, who's like he don't really care about technicals, etc. If it's cheap and he expects to make a good return from that level sometime in the future, basically if you think it's undervalued, he's buying. He's not holding off buying, putting money at work when he thinks he will have a good return, just because there's a quote risk or opportunity that it will get even cheaper. Because if he's wrong, you miss that opportunity. That's why I keep saying that I cannot afford to sell here in hopes that it will go down. Because then I actively said no to, this turned out to be the best buy since 2016. And again, sticking to my strategy. This is in 2018, and this was a very brutal. This felt endless. I remember these times, and you see how many false starts there are. I mean, this is quite the rally. I mean, pretty much higher high. This was a higher high than this. Every single time it ended up going even lower. But the lower it went, the more I bought. So then all of a sudden I'm fully invested, have lowered my average over this period in time, and then it goes up again. And then I already showed what I did, 2020, it's like it would be dumb to sell, etc. So I didn't. So I mean, from this period here, I was, quite a rally up to here, and then flash crash, didn't sell, bought if I had something, and then up again. Obviously, that's when we had the most recent peak, again, like I said, the point is just to show, because I think, let's say trolls or whatever, who's like, oh, you're always bullish, and it's like you're always saying buy, and if they have just followed me since 2020 or whatever, it's like, and maybe they're buying a lot of shitcoins or something that's trading sardines that's down like 80%. Yeah, that sucks, of course, but it doesn't get better by buying low. Because I looked wrong over this entire period of time, pretty much. But I just kept on buying and buying and buying and learning and increasing my understanding of how do you evaluate juniors and all of that. So it's like I got better and better, and I got better and better opportunities. So that's not a waste. I mean, a bear market, if you ever want to have if you have several months to learn and research companies, you could get yourself into what you think are the best possible juniors. I mean, here you didn't have any time to learn React or do due diligence on 20 juniors and try to figure out, hey, if of these 20, maybe all are buys, but like 5 are definitely better buys than the other 15 after a lot of due diligence. You didn't have time to react. So these are prolonged gifts, bargain periods, where you can do a lot of due diligence. And again, if you increase, even though the price is same here as here, and sure it's closer to the next uptrend because this was the bottom, still, if you imagine if you increase your portfolio quality by 20%. The cases you own on average are 20% better than here. So you pay the same price, but the quality and future expected returns are even higher. Then you actually make even more, and then this was a really good thing that happened, because you add, let's say, who knows, 20, 30%, 40% in expected return simply by value shuffling and getting into your higher conviction stories, or stories you dig into and realize, hey, I mean, these are even better. But you wouldn't have time to do that unless you had this kind of, let's say, flat development. Because if it takes you up until now to figure out what companies or what products, etc., are better, but maybe the opportunities will not be the same. Maybe someone has figured out that, oh Jesus, those 5 companies are for sure better than the rest, so maybe they revalued more. So then you kind of miss that simply because it took longer for you to come to the conclusion, and the market already figured that out. But most people don't. I mean, like I also said before, it's like nowadays, nobody sold here or here because they thought they owned something overvalued. This was 100% emotional panic selling. Can't take this anymore. This is never gonna go up. Why bother? I see another sector that works. So if you know that almost everyone that's selling is either forced selling, margin calls or needing money, etc., and nobody's really buying, there's not enough buying, and nobody really cares about price to value, because it looks like it doesn't matter what I've owned over this period because everything is sucked. That's a very big advantage to stay rational and actually like, hey, wait a minute, these juniors, the specific juniors have created a lot of value, but they've been punished like everyone else because nobody cares and everybody sells what they have or what they can, let's say, not what they should. A bunch of opportunities found here, and with this kind of volatility, etc., and panic selling, especially here. I mean, I remember Mag Silver went down like 55%. Like I guess one of the highest quality silver juniors. And silver, I mean, it went down, but not that much. It's just incredible. I mean, in hindsight, I wish I would have been more hands-on with some other, but I was, busy with holding on to the juniors already had. But point is that these prolonged downtrends like this, contrary to these, are good in the sense that more time for due diligence, more time to tighten up your portfolio, and like I also mentioned, and which I try to follow more and more myself, that ideally we should have no holds in our portfolios. We should not we should not hold a company which we're not sure if we should sell or buy. We should only own the ones that, yes, at these prices we think they are no-brainers, absolute no-brainers, because then we at least have conviction and they are probably better stories. Instead of just, hey, it is what it is, I have these and I'm just going to close my eyes and wait for the upturn. If you can look at the pain, soak up the pain, if you're not, greedy enough so you think it's a big curse, you could still be very constructive and do a lot of work, because your portfolio in the long run is going to thank you for every single rational thing you do. And I'm not talking about over trading on market timing or stuff like that, but it's like, hey, okay, I have these juniors. Story hasn't gone really well, yada yada. It's like, yeah, I think they're cheap, etc. But it's like, maybe you find a company that it's not only cheap, but it's like 200% cheaper, or cases 200% better than the ones you have already, or a few ones you have. Then you could sell that, value shuffle, and again, if you sell shares for $2,000 and you buy other shares for $2,000, the portfolio value will not change, but the future portfolio value, assuming you're on average corrected, yes, the cases you sold, the money is better spent in the buying these new companies or other companies, or doubling down on the better companies you already hold. It's going to impact your future portfolio and and obviously since it is compounding. So if you make some value shuffling here, which increases your 2-year expected return, so like you add on 30%. So you're 30% more than you would have if you did nothing. So in 2 years, that's 30% more. If you can keep doing that kind of stuff, if you could add on, not maybe 30% in absolute terms, but it's like in relative, that's gonna, in 10 years, that's gonna be a huge amount of money. But again, at face value, when you actually do it on that day, there's no change, because you sell stock for $2,000 and you buy stock for $2,000. But in 10 years, maybe that money you made from that first, you can just compound that after value shuffling at the next low, whatever. That's going to add up. Maybe you will have increased your final portfolio returns in 20 years by, who knows, hundreds of percent, thousands of dollars. This is from, the last bottom. I made a tweet, absolutely remarkable how buy low sale. That's the funny thing, is that's my title of my last video. How buy low sell high turns into sell low, it can go lower, and buy high, it can go higher every time it's applicable. Most people can't afford big drawdowns because they never started buying anywhere near low in the first place. So it's like, it was kind of fun. It's like, that's exactly what, similar vibes today. This will happen forever and ever. It was at this point in time. Buy low and sell turns into sell. Nobody was screaming buy here. Everybody was, again, like always, talking about the next downside target. Up here, everybody's talking about the upside target. And again, yes, you read a bunch of people with charts, etc. on Twitter, etc. Majority of people don't really make any money. If you have somebody's like, I'm selling, subscriptions 20 years into my career, it's like, if they were good at compounding, they probably wouldn't need to be selling subscriptions, unless it's like they don't really take that much risks themselves or whatever. But it just goes without saying. Warren Buffett, he's not selling subscriptions, and it's like the big fund managers, like, they're rich. If they do a talk or a presentation, etc., it's like they do it for free. They don't need the money. But it's like, it's kind of similar vibes today, even though we're higher. And again, that's the funny part. It's like there's a lot of bitching, etc. today. Juniors have not performed like GDXJ. Last time I looked at a hodl portfolio, I think that those are now minus for the year, mostly thanks to Magna getting cheaper last several weeks. But they've all underperformed the GDXJ. But that's okay. That portfolio is a lot cheaper than GDXJ, so it's going to come back with a vengeance one day. And that's typically what happens. Majors and producers and mid-tiers, they move first. Then it takes a while before capital actually gets into the more risky aspect, where there's still cheap stocks, where the companies are still cheap when, after these have gotten a bit rich. But again, just trying to pointing out, it's like, caught falling knives here, stupid sell here, buy sell low because it can always go lower here. So it's like, I may be accused of a lot of things, but it's like I'm consistent. Unfortunately, I wasn't active on Twitter back here, but I started my blog on February 2016, which was here. and I actually started buying here or something, August 2015. So again, it's like I'm 100% long from every low, and we don't know. Maybe this was the low. We don't even know that, but I know I was fully invested from that low. I didn't know. Yeah, again, it's like we knew this was the low. I don't know, up here or whatever you want to call. Was the actual low. Anyways, like, yeah, this is not rocket science. If it's a cyclical sector, it means it goes up and down. And typically, the higher it goes, the lower it goes. The lower it goes, the higher it goes. That's it. That's why Pierre Lassonde calls this the gold sector the easiest sector in the world. And that's what I'm just keep hammering in. It's like every week, few videos. But still, like today, you get trolled by people who have no idea. It's like, yeah, I've said, I'm buying ever since this sector was cheap. The juniors are cheaper than GDXJ, obviously. I mean, Bear Creek Mining is down here or something. I just buy and buy and buy, and I look wrong for long periods of time. This is Bear Creek Mining. I mean, look at this trend here. Looking wrong, just lowering my average, boom, up, looking wrong, boom. And this is kind of funny. This was around, the last, the low here. It's like I've highlighted my pal Aaron a few times. It's like, of course, this is to gaslight, and again, it's like, now I won't be buying P2. I'm gonna wait for P7 when the trend is your friend and the risk is lower. I mean, basically, what I'm saying is, like, to me, you would be stupid not to buy these lows when they're so obnoxiously cheap that you're gonna make money one day, because you're hoping that it's gonna go even lower. And so far, this didn't go any lower. But a lot of people did not buy because they, as always, think the trend is your friend, and what is low. I mean, there's always downside targets. You hear about downside targets here. Very few actually buy. And you don't need to be 100% correct. It's just if you ramp up your buying, the lower it goes. I mean, more money you're going to make. And of course, it's like, most people hate having paper losses, and most people can't for the life of them fathom. It's like, how could you ever have a 50% paper loss and make money in the long term, etc.? How on earth is that? How on earth could you be a successful investor? And my point, I'll stick with what the richest do, though. They've been dead wrong. Yeah, here Buffett is almost broke. Buffett hates gold, and I mean, the point being that's like, if it's cheap, it's cheap. I mean, you don't need a chart to confirm if it's cheap. And if you're buying after a trend has gone up, you're actually saying that, again, like my point here. You're waiting for it to become more expensive before you feel okay to buy. Even though if you could buy, let's say, a solid company P2s, like, you would be absolutely a moron not to buy that. And instead wait for a P7. You're waiting for lower future returns because you want the recent trend to be suggesting that it's going to keep higher. And Adam Lundin famously said that's like, yeah, when the trend is your friend, it's already too late. I mean, when is the trend your friend here? When is the trend your friend here? When do you know it's going up? This looked to be a start of an uptrend. Higher high. Rocket ship. Nope. This looked like maybe the trend was your friend. Higher high. Broke out of resistance. Nope. Higher high. Boom. Kind of a higher high. Well, that actually did not end... that wasn't a lower low, it was a higher low. But here, trend's your friend. Big breakdown, bottom is in. Or here, yeah, takes out these highs. Top. I mean, it sounds like, yeah, I'll buy when the trend is your friend. I mean, if you're wrong, you're just, ready to get slaughtered unless you have, stop losses or whatever. But as I've shown, it's like you don't even need market timing. Why do I want to sweat? It's like, oh, I don't know, maybe the trend is my friend here or here. When is the trend your friend? When the trend is absolutely maximal, in a maximum way, not your friend, those are the best buys. Because the bottom is supposed to feel bottomless. Yeah, it's like Charlie Munger. If you can stomach 50% declines in your investment, you will get the mediocre returns you deserve. Nobody understands what he means by that. Why it's like, since I've been down 50% a bunch of times, it's like nobody can seem to be able to figure out, like, how on earth can you be a good investor if you can have 50% drawdowns? And then you have one of the best investors in the world. Like, if you can't even stomach a 50% decline, you'll get the mediocre returns you deserve. Buying, this was GDX. Buying in, or was it? Maybe here. This was a 50% decline. Obviously foolish to sell at minus 50 because that would be the bottom. It's like, no, I'm going to sell here so I don't risk getting a 50% decline, because you're not supposed to have a 50% decline. Again, when are you stopping out? Let's say this goes down and you're down 40% here. Well, I can't go down 50%, so you stop out. So when are you buying back? Instead of just, oh my God, how cheap it is. This sector is absolutely brain dead. Panic selling, buy all the way down. Minus 50% for a short period, but you added all the way down. So you end up making more money than if it just went like this. Oh, and it's like, yeah, I understand the frustrations. Like, yeah, kind of hard to blame someone for not wanting to sit around for 4 years. The thing is, you never know. You absolutely never know. I didn't know this was going to take 2 years. People thought that this was going to go way lower, and then it went up, in just a few months. And same here. You never know. That's the thing. But everybody wants certainty. The thing people fear the most are paper losses, and they get greedy, especially if they think that the returns are imminent. And that's why typically you see, if everybody expects very good results from a Junior Explorer and in a good sentiment environment where people are actually a bit greedy, they'll buy up that company going into assay results because people think, hey, I'm for sure going to, if they hit, I'm going to be rich. Because it's imminent. Oh, 1 week to assays, for sure I'm going to buy. Even though it's like, yeah, if nothing else has changed and price is just going up and up and up into assays, obviously the risk reward is going down. Because you're more and more of the potential is priced in. And you would need even better results to get rich tomorrow, which you won't, because like we've seen, a bunch of these juniors, when they actually do a discovery, I mean, they go up 50 to 100% or something. I mean, they don't become a 10-bagger after one discovery. It's like Great Bear. Short went up 100% or something or in a short period of time after the discovery. But after that 100% pop, when I bet a bunch of people were taking profits, then the 10 to 20-bagger journey started. So it's like I show here, it's like, why would you be in a sucky sector, etc. This is what everybody wants. They want to, on paper, be making money all the time. Even though if you would, assuming this is the end station, let's take, let's take an example here. This is what people want to see. Steady paper profits. Just go up to over, let's say this is overvaluation, etc., high sentiment environment. This is what people prefer to do. This is From here, if we go like this, everybody will be happy, everybody will be cheering. In what way, since we know we're going to get into a high sentiment environment one day, and we know that the closer we get, the lower we've gotten our returns and the lower returns are left for us. By definition, from here, let's say you have 61% returns. The higher it goes, the lower our future returns goes. Okay, so if we buy monthly, etc., every additional dollar invested is decreasing in future profits, and the portfolio as a whole goes down because we've already made profits, and the future profits goes down. And up here, our portfolio and any additional purchase of shares here only has 10% expected return. If you want even higher returns, in an extreme scenario, we would want something like this instead. Because from here, we're going to go to this place anyway. And let's assume that we go into, the same time frame. So in August of 2025, we'll be up here. That's a bit extreme. Meaning that it's a long time for not a huge return. Anyway, so we assume that the portfolio we have here is going to go up there, up 61%. If we have any money, salary, whatever, we're still going to get the 60% on the portfolio, even though we're going to take a big bath first. So this is going to turn from, let's say, 10,000 to 5,000 and then to 16,000, let's say. Okay, so we're going to get to 16,000. The existing portfolio is going to have the same returns regardless if price goes like this or this first. But if we can invest along the way, every additional dry powder, any additional money we put in buying shares is going to get higher and higher future returns. So we're going to end up making a lot more money from this share price movement than this. And that's what this is all about. This is what people dream about. That you will get paper profit and lower future paper profits. Instead of, let's say, no real, or we can have a scenario like this, where you have like I had when I started buying here. You had that low, I was too early, but we know that yes, we're gonna get to a high regardless if it goes like this or like this. Obviously, you would make a lot more money in this scenario. If you just held, did nothing, you didn't sell, but you only held. This would feel better, but at the end of the day, 10,000 would become 20,000 in both scenarios. It's just that this has a big paper loss, frustrating period, blah blah blah, and then a rocket ship. But if you knew that this was cheap, maybe value was going something like the share price in scenario 1, you would be just buying and buying and buying and buying. And if you could have added 15% to your holdings over this period here, that 15% addition might on average go up 400%. That's gonna have a huge impact instead of just getting 100% from here and less the more you bought in scenario 1. This kind of share price action with monthly buying is gonna have significantly higher returns than this. But nobody, again, like this guy here, nobody can see that. Nobody understands why you would be in a sucky sector. Everybody thinks that this is the opportunity cost. If you're up here, you say, what opportunity cost. Opportunity cost is not looking in hindsight, which for some reason everybody does. Opportunity cost is, where's the best opportunity at any given point? Is this a better buy because it's gone up, or is this a better buy because it's not gone up yet? I would say this is a lot better. we're having a 500 expected return from here, maybe 50% from here or whatever. I'm assuming this is like logarithmic. But people will say that it's costly. This has a high opportunity cost. Now this has a high opportunity cost relative to this, because you're going to make a lot more money in this than you're going to do in this. Opportunity cost is always about the future, and of course risk reward and all of that. It's not about what has happened or what the trend looks like, etc. Especially if you're a value investor. Opportunity cost for a value investor is if you find something cheaper. That's it. It's nothing to do with how the price has done in the recent past. Oh, so just the last example here. Let's say this is 700% from bottom to top. If you sell, you miss out on 700%. If you hold, you'll capture the 700%. Obviously, enormous difference from sell and hold. But buying can have enormous difference, especially the more you buy. So here we have an example. Let's assume that from here to next sentiment high is 600%. I'm just making a number up now. You start off with 10,000. If you make the decision, and we can buy, sell or hold at any point in time. If we sell our portfolio, we'll have 10,000 left after, let's say in I don't know, let's say 1.5 years or whatever. We'll have 10,000 left. If we did nothing and found no other opportunity, we just took home the money. If we did not sell, this portfolio, which is worth 10,000 now, will be worth 70,000 up here. Then we have the option to buy. Let's say we had 10,000. We chose not to sell because it would be absolutely moronic to sell this cheap when the future expected returns are extreme. We also forgo option 2 to just hold. Assuming we have like $5,000 we could invest. I mean, I'm not talking going all in. I'm talking it's like, yeah, I can afford to quote lose this, or I don't need it in the next 2-3 years or whatever. So we make the decision not to hold and keep $5,000 in cash. We actually we buy 5,000. That 5,000 is going to go up 7 times. So at the end, we're going to have $105,000. So the difference from selling to holding is significant, given that this is so low. The opportunity is to buy or hold is so great. So it's 60,000. But if we bought for $5,000, we make 35. We end up with 35,000 more. 5,000 extra added in, 35,000 more. So you have 3. Of course, like what should be obvious is like the more you buy, obviously the higher your future portfolio value will be. That's why it's like, yeah, if you add 1%, if you can add 1% at these levels, that's something. I mean, that could add up. I'm obviously, it's like I'm buying as much as I can, because I have no idea when these opportunities are gonna go away. So I didn't know when this was gonna go away so quickly, but it did. I didn't know this was the last day I could catch this knife, but it was. I didn't know that this was the bottom, but it was. Given how cheap juniors are, I assume that the uptrend could start, because it should start any day. If it's not today, it should be tomorrow. If it's not tomorrow, it should be the day after. If it's not in 6 months, it should be in 6 months and 1 day. Someday it's just going to turn, and we won't know it until we're much higher. maybe it wasn't until here we knew that this was the bottom, etc., etc. I don't know that. I'm not gonna know where the bottom is unless much later. Maybe this was the bottom. We don't know, and no, absolutely no idea. Doesn't matter. If it goes down from here, these buys will not be in vain. We're gonna make money on them, but we buying adds even more, because obviously it's like, okay, let's say it goes down here. Same thing. It's like selling doesn't appear to be bad, but if we're not buying back, it's gonna be very costly. Holding looks to have been bad, but we're gonna get the same results. It's just that buying, you have the option to buy. So if you can add on 1,000 extra then, so this by itself is gonna turn into $35,000 when we turn around again. But you had the opportunity to buy, and if you buy for 1,000, maybe down here it's like 800%, whatever, 700%. Buying goes up, so 1,000 to add here is great and all, and 5,000 to add here is even better. But holding and buying, etc., everything is better than selling in the end, and that's what we care about, because we can never know where the share price is going to go in the short term, but we know that sentiment is going to swing bigly one day. That's the whole case. That's where the risk reward is. We're waiting for the inevitable mean reversion. That is the whole point. Knowing where it's going to go in the short term, to me, that's impossible. I'm after the big money, the big swings, and the lower it goes, the more valuable buys are. So it's like, again, if it goes down even further and just, the future returns just get jacked up. So yeah, sure, it's, take some more paper losses in the meantime, but every additional buy, 1,000 is gonna boost my portfolio more at this level than this level, and this is gonna 1,000 here in added dry powder is gonna be worth more to my portfolio long term than here or here or here or here or here or here, whatever. And from a compounding perspective, lower levels, shorter in time, so maybe the final uptrend is gonna start here, whatever. So this is obviously closer in time than this, etc. Not that it matters, that much, and that's also my point. Is like, given how extreme these future returns are for this sector, it doesn't matter that much how much time. And because, like someone said, can you wait 4 years? Let's say 3 years have passed, or 2.5, whatever. We're deep into a down cycle. Does it matter if you have to wait 2 years for 400% from here? Let's say these prices continue for 6 months. You can add, 10% to your portfolio, and you're gonna have, 700% returns. It doesn't matter. The returns are so extreme that it's like the timing becomes less of an issue. Down here, I don't know how long we would have to wait for 500% returns before it actually becomes like detrimental. Yeah, okay, I understand it might suck. That's like, you sit here for 2-3 years, nothing happens, and then boom. In the end, you're gonna end up making more. But in the meantime, yeah, it might not be fun to see, hey, my portfolio is down 50% for 2-3 years. But in the end, you're probably gonna outperform everyone, because 95% of people don't even beat an index. They don't even beat an index when it goes like this, for example. So everything is about the last laugh, really, unless you expect to die within before a potential upturn starts. Other than that, these are such extreme levels that rationally one should be okay to wait for years from here. And given that the longer it takes, the closer we are to the next uptrend, buying just becomes better. So if you could buy for a year or two more, you might have added, I don't know, depends on your portfolio, I guess, but like, let's say 30%, and you did value reshuffling and all that kind of sweet stuff. At the end, when that actually goes into a high sentiment environment, you are not going to be complaining about this period anymore, because you would probably be up so much that you're going to crush anyone else's returns, because there's almost nobody that is going to stomach sitting in this sector anymore. Because like I said today, prices are not even lower than in October. That goes for quite a few juniors, I would say. But you can sense that pain is going up now, because now it's just a longer. So pain is a function of absolute paper losses and time. So if price stays the same, but time passes, more pain. If prices go down as well with more time in a correction, that's a multiplier effect, much more pain. So we can't have too much more of this until everyone has sold out. That's what I think, because you can, again, now we're starting to see trolls, etc. pop up. Well, not intentional trolls, but it's like, yeah, they're pissed off, they're hurting, they don't know what to do, they're emotional, they lash out, they hate the world. Every additional down day. Just watch Twitter if we have, if we continue this downtrend. You're gonna see so much trolling and so much bellyache, and it's just gonna be obscene. Even though it's like, when you're very rational about it, it's beyond obvious what to do. It's like, okay, future returns are going up. Period of closer and closer to the actual D bottom, if this was not the bottom. So for a value investor or anyone with just common sense, they call them contrarians. I don't like the word contrarian, because contrarian is just common sense. In my book, it's like, I don't need to be a contrarian to know that things out there is just so cheap that it's absolutely ridiculous. And it's like, if I have 20 of those companies, maybe my expected portfolio return will be 400 or 500% over the next 2 years or whatever. But still, keep that in mind. Look how people are gonna act if this continues. If we get more selling, if gold goes to what the hell, I don't even know what level, but it's like you already see downward targets. Let's say gold goes, I don't know, something like that. And juniors, go down as well. It's like there's gonna be a obscene amount of pain, even though I don't have the I actually have the right, even though we're already at such extremely cheap levels that I don't know where gold would need to go before these gold juniors became expensive, etc. And that's, think about from a risk reward perspective. If you're paying prices for some, above average quality juniors, preferably higher quality juniors, and they're pricing in $1,500 gold, what's the worst thing that can happen? Gold goes to 1,500 and you paid a fair price. Or gold stops one of these days, whatever, goes to, I don't know, 2,200, 2,500, and you own the juniors, and you paid, you had such a speculative discount that you paid a fair price as if gold was at 1,500, and all of a sudden it's at 2,500. All of a sudden people care. That's the thing. It's like, in your average high quality junior, this might be the risk to the downside, paper risk, and that's a risk. That's not a given. This might be the upside risk. This glass is so empty right now. The biggest delta is obviously to the upside. And if prices goes lower, that just means that the risk to the downside decrease and future expected returns increase. So it's getting more and more spring-loaded. Every buy goes up exponentially. Holding goes up exponentially versus selling. If you have dry powder, your ending portfolio is going to be up even more. So it's totally, people see this as a curse. Others see this as a gift. I would say 95% of people see this kind of action here as a curse. People hate the opportunity to buy low. That's how it is. People love this sector up here, they love it up here. Hate it here, hate it here, hate it here, absolutely hate it here. Gonna hate it even more down here. Because everybody hates opportunities. And I'm gonna keep saying the same thing. If this goes lower, I'm gonna do what I've always done. Keep on buying every single low. Add on, lower my average, increase my share ownership of all these high quality juniors. Buy up more and more gold. Maybe I can buy, an ounce for, heck do I know, $15 today. Maybe in a few months I can buy them for 10. So I just get, buy more and more ounces. More and more copper pounds, more and more nickel pounds, more whatever. It's like my ownership of these commodities is going up, and my buying power is going up with prices going down, and the future expected returns are going higher. And the longer the downtrend continues, they're getting closer in time. By definition, everything is by definition from common sense, since this is a cyclical sector. It's not rocket science. If you just bought in this box here or whatever, you would have made money every time. It's just depending on when. Yeah, anyway, I thought that might be interesting to see some examples that I'm sticking to my guns. This is not my first rodeo. I'm deploying the exact same strategy, and believe me, I was not complaining afterwards that I was catching falling knives down here or here or here, and I don't think I'll be complaining about this period either. It's frustrating now, but I've seen my portfolio go from minus 54% to up to 300%. From deep red to insane green. Deep red, insane green, deep red, insane green. Deep red, insane green, etc., etc. And obviously I think I'm getting better and better at, stock picking, etc. I don't think you need to be an extremely good stock picker at these levels, but I mean it doesn't hurt. And of course, I expect that if we bottom soon and we go like one of these, etc., my companies will not be the highest performers. Because I am not deep into beta plays. I own some very high beta plays, if one could call it that. Yeah, I guess so. But no pure beta plays. So theoretically, anyone who's like all in Bear Creek Mining and a bunch of other beta plays, if this sector shot up tomorrow, gold headed to 2,500, silver to 30, whatever, they would make a lot more than me. Just like the people in Dogecoin outperform my portfolio by 1,000% for a period of time. But investing is not about always having sitting on paper profits. Investing is that when our investing career is over, however long that might be, you would want your portfolio to be higher, even though it looks like this. But most people would prefer, well, not really, but it would feel a lot better if their portfolio went something like this. That's the endless, infinite, slow rolling train upwards. Whereas I'm comfortable with the volatility, or you have to be, and of course, given that the buying opportunities and returns are higher here, so if you could buy, if you have a trend like this, and you have dips like this, this doesn't look too huge, but it's like every single buy on this short is gonna be better than any buy in this. But this is what everybody wanna hold. I mean, this buy, I mean, that's a big jump. Incredible buys. Even this is gonna end up in profit given enough time, etc. Sure, every buy here will also end in profit, but it's like quite low returns, even though steady. But if you increase your buying at the lows here, at the end you're gonna the actual. I mean, if we look at the total, portfolio with some good buying, it's not gonna be even linear. It's gonna be more like I don't know, something like this perhaps. It's like in Great Bear or whatever. It's like, yeah. Excuse me. After a hold, if you held on Great Bear, you would get a 10 to 20 bagger. But if you could also buy every low, I mean, like the last low or the last downtrend, over a year worth of a downtrending action, if you average down in that, then the revaluation happens suddenly. If you bought more and more, the lower that went. Every additional buy would have a higher payoff, future payoff, when it was acquired, plus a shorter time period. So the bottom of that buy in the Great Bear chart, for example, the last dip, that might have been 4 months from the buyout, which means that it's like, I think that would be around 100% return in 4 months. Absolutely extreme. But if you bought earlier than that, halfway into the downtrend, maybe you would have netted a 50% return in 8 months. That's still very, very good. But if you can just ramp up your buying at these sentiment lows in good stories, that's going to hugely affect your long-term results. Yeah, thanks for listening. I hope this was is beneficial. Again, it's like I don't know, how long I have to keep doing these, but I feel compelled to it when I have some good examples. Again, it's the mindset. You should brainwash yourself with common sense that you end up just thinking, if your favorite, high quality junior goes down in price tomorrow, yeah, sure, metals are down. Your reaction should be, lol, I'm gonna make even more money, or lol, it's like the market is just getting more and more stupid, because it is a silly sector. Again, Bear Creek Mining didn't change this much in value over this period of time. It didn't suddenly go from, their projects didn't go from being worth this much to this much, to this much, to this much. Value did not shift that much. But people's greed and fear made the price swing that much. So again, you don't, I mean, I know people say it's like the trend is your friend and the market is always right. I mean, my mindset is, the trend is not your friend, because that means, again, it's like if I'm buying here when the trend is my friend, I'm just making a worse buy than down here, because there's less upside and more downside. And also, the market is always wrong. Because the thing is that if you have I'm super bullish at lows. Again, the worst case scenario in a cyclical sector is that they go down for longer. I mean, let's say I'm super bullish here. Oh, it went down, and before it went up. That's like the price I pay. Yeah, it was early, so I have a bigger paper loss. But if I sell here because the trend is not my friend and I think it's gonna go up, and it doesn't go up, I just missed the opportunity. So in that case, like, let's say I sold here, that's like 280% instead of 120. I just gave away 140 or 60%. How much? What happens if I'm wrong? What happens if I'm right? If I'm wrong, that we're not close to a bottom, that means more shitty action. And I'll buy the shit out of that, and I'll end up making more money as per this. I'm not gonna even say if I'm wrong or right, but it's like, if this is cheap and it gets cheaper, I'm gonna end up making more money. If this is cheap and does not end up making more money, I'm not gonna see a better buy. If we knew for sure this is the last day, everybody would be piling in. Everybody would go all in if we knew this was gonna happen. Nobody knows that, of course, but we know that sentiment always changes. So this is just a question of when. So I'm buying buying as much as I can. That is simply, again, it's like simply common sense. So you should look at this ridiculous market. Think of Mr. Market in the junior sector as your neighbor. This is your neighbor setting these wacky prices. How much, let's say your neighbor that typically goes all in Dogecoin at the top. How much respect would you have for Mr. Market if you thought that, hey, the ones that's selling to me if I'm buying down here is my neighbor? You would think like, oh, poor sucker. I mean, he can't, see an opportunity even if it hit him in his head. Because by definition, if it's this cheap, you can't be very wrong. There are some juniors I think out there just like selling for near cash levels. How on earth are you overpaying for that? That's pretty much impossible. Unless it's like super crooks or something like that. And we know that there's some absolutely retarded prices out there. I know I'm not making a mistake. That's where my conviction comes from. I know these are absolutely ridiculous prices. They don't reflect how hard it is to find metals. They don't reflect the supply-demand picture. And sure, it's like, yeah, hard landing. A lot of people say it's, a sure thing that Q3 or Q4 we're going to have a hard landing. Yes, sure. Maybe that happens. Maybe copper crashes. Maybe paper metals crashes. Then what? Are they going to crash forever? If I buy something, a junior, that's pricing in a crash or a worthless business already, where's my downside? If I'm paying for a worthless business on paper and the business becomes worthless, I paid a fair price. If it doesn't crash and goes up, I'm going to make a ton of money. If it crashes first, then I'm going to go up later. So the worst thing from here is like you can have a bigger paper loss. That's the biggest fear. But nobody thinks about paper losses up here. This is when people think how much more paper gains they're going to have. So it's just ridiculous how skewed it is. I mean, the risk reward is just absurd, mind-numbing. I know I'm not making a mistake. It's just incredible. You don't know exactly what company's going to do well and all of that and geopolitics, but it's like, yeah, I'm not all in any stock. I'm all in, but across, many juniors, and many I think have, very high upside potential. Even if that's a 2% position, if that becomes, who knows, a 10-bagger in 3 years. And again, once this sentiment starts going and we get some momentum, you can see how quickly, the revaluations can happen. It just like that. This was super epic. Or something like this. Like Broom. Pause for, almost 6 months of pause in this one at least, and then boom. It's just absolutely crazy. And we know this sector is extremely much closer to a bottom than a top. So again, what is the worst case scenario? That this sector stays cheaper for longer? Is that even a curse? Yeah, okay, maybe if if I die within, I don't know, 3 years, knock on wood, which I hope I won't, and if it hasn't turned in 3 years, yeah, that would be sucky for me. But if it would take 3 years and then boom, go up, and you get 600% in like 4 years or whatever, it's like, yeah, that would be more than worth it. You would outperform almost everyone, and especially your neighbor. Unless something really wacky has happened and everything else is up like 800%, but I don't see that happening. Yeah, thanks for listening. Stay rational, cool, common sense, and never forget that, like Bob says, nobody knows anything. Most people's, almost everyone's opinion you read on Twitter, etc., is coming from someone who doesn't really outperform an index over the long term. So it's like if you think what someone says doesn't really make sense or whatever, or their market timing and all of that, they probably don't have very good results. So it's like, don't pay too much attention on that stuff. I mean, like I said, I think my strategy is like super easy, simple as possible. Buy as much as you can when it's no-brainer cheap, and then wait, and just do that all over again. And hopefully you'll have a few companies that actually have no-brainer cheap but can grow, and then they go up, and when the next sentiment low happens, they go something like this, and then they go something like that up until the new sentiment high, and then we have maybe a longer correction, maybe something like this, and then up. But the trend is up in that case, and you can make some absolute ridiculous buys if you just average down in them when they correct, or you value reshuffle, whatever. Yeah, thanks for listening. Bye.